There's one trick that I implemented that completely fixed my trading, and that trick is trading with levels. Now, why are levels so important? I mean, can't you just look at the lower time frame? Like, for example, I'm a VWAP trader, okay? And before I started implementing some levels, key levels into my trading, I would only look at VWAP. I would only look at the lower time frames and just read and react off of VWAP. And yeah, this can work, but a lot of times you'll take unnecessary losses to where it could have been very preventable if you just had a bit more higher time frame context and implemented that into your trading decisions. Now, like I was saying before, I just take a trade. If VWAP rejected price, then I would get in short. If we're above the VWAP and we bounce off VWAP, then, hey, I'd get in long. And yeah, you would find sometimes that you win, but also it just seemed like a 50-50 gamble because you never really know why VWAP is being respected and why price is moving higher, and vice versa. Let's say we're rejecting VWAP. Okay, why is that happening? Is there some type of magnet that the market wants to kind of like hit, or am I being induced? Am I being trapped? If I'm taking a long bounce play off of VWAP, but I lose, why am I losing? And sometimes, yeah, you won't have the answers to these questions, but a lot of times I feel like you can, especially if you're only looking at the lower time frame and you're not losing levels. By using levels and implementing the higher time frame and marking off the levels that you find off these higher time frames, you get a lot more context, and it just gives you more information to make accurate decisions while trading. For example, I can avoid entering a long, getting trapped, if I know that I'm basically buying after we just rejected a key level. Vice versa, if I'm entering short, I can prevent myself from entering in that short and getting trapped if I have the information that we just bought off of a major support zone that we've already bounced off of 4 times this week. And if we dive into the 1 hour chart, you will literally see that I'm not lying. I mean, this week alone, we've had a major support zone that presented to where it presented really great buying opportunities. We have the first buying opportunity to where this kind of like higher low was established, indicating that we could find interested buyers on here. So that's why we mark this area off. And then as the zone gets interacted with more and more, we could adjust it or make it even smaller. But originally, I'm marking off this higher low right here as a zone of interest. And then as we go deeper into the week, we see that we touch and go off the zone here. We also do it for a 3rd time right here. And then for the final and 4th time yesterday, to where we just kind of ripped after touching this support zone, and which kind of like led to the rip overnight. And then even today, we may not want to interact with the support zone again, because the 4th touch may have been the last touch to where we could have gotten in and making a new higher high in order to kind of continue this trend higher. But again, if we just zoom out, this isn't the only time that this occurred. If we look at the previous consolidation period as well, we can see that down here, this could have been a major nice support area. But if we want to mark this off accurately, like how I had it, what I did is I saw this as, at the time, this was a significant higher high, okay? We have kind of like a nice double top right here. Sellers tend to step in here, so I'm going to go ahead and mark this zone off. And at first, this is looked at as a block of resistance that we need to get through in order for us to move higher. And again, like I said, these zones are never going to be absolutely perfect, but as long as prices around this zone or area, I mean, you can definitely expect for maybe buyers or sellers to step in, depending on how you're planning on using this zone or key level. And basically here we see that we have a higher high here, price moves lower, and then now buyers are strong enough to break through this previous higher high, making a new high. And then once we do that, now this resistance turns into support here. And then we also get some support at the same level down here. And then we get for a 3rd time right here after just ripping. So we tested one more time for a 3rd time and we bounced from it. We as you can see, we did close below it, but at the same time, buyers still were able to kind of like sweep these lows right here and then rip from this support zone. And this is why using key levels is really important, because just imagine getting in short anywhere right here and then it just kind of rips your face off. Imagine getting short anywhere right here and then boom, it instantly rips your face off. This is what I mean when I say I believe these key levels on the higher time frame provides you with more context. Because if I see a VWAP, a nice VWAP rejection play around here, and I have no idea that there's a support zone down here, well, then that's just kind of like irresponsible for me as a trader to not understand that, hey, buyers stepped in exactly where I'm planning to going short at previously. But if I don't know that by not looking at the higher time frame and marking off these levels, well, then I'm just going to think, hey, it's a loss. What can I do? Right. But again, if you have this information on your chart, you can add to your discretion. You can build upon your strategy, your system as a trader, and just have more information to work off of rather than just gambling. Oh, whenever this happens, I'm just going to execute. Because then you could just create an algo to do that for you, right? But we're traders, we're humans. We need to trade off discretion, and this just adds to the decision making and discretion. So I like to hold levels as number one, and then VWAP. I'm not going to trade into I'm not going to take a long after we just clearly rejected or we're trading into our resistance zone. That makes no sense because there's a high possibility that shorts could come in and my trade won't work. If you're just going for a few little points, then I guess. But in reality, I'm going for 10 to 15 points usually. And I don't want to trade 10 to 15 points when the support zone or resistance zone is literally 5 points away from me. And obviously, it's a lot easier said than done in hindsight. You could just always go back to the charts and be like, hey, I definitely shouldn't have bought here. Or definitely shouldn't have sold here. Oh, here, there's a support zone here, right? But I'm going to show you some actual trade examples that I actually traded from April the 30th, which was last Wednesday. And then also, I believe I'm showing you another example of, what is this day? May the 6th, which was Tuesday, so 2 days ago. But let's first start off on the 30th. And we can just see here that this is the week to where I highlighted earlier on, to where we had a some nice support down here, and then we had a clear resistance up here. This is the area to where we saw sellers stepping in. This is the level to where we saw buyers stepping in. So with that being said, look at this. We have this support down here and resistance up here. Now, looking into the first trade, again, this is a lesson that I'm pretty sure all of us needs to know. I'm basically playing the bounce off of the previous day's New York VWAP and the daily anchored VWAP. And normally, yeah, dude, this looks like an amazing trade. We broke out above the daily and previous day's New York, and now we're retesting it. This is a textbook trade. But again, if I zoom out and look at higher context, what do we see? Well, we can see that if we look on the left-hand side on the 15-minute and also the 5-minute, we are basically taking along directly inside this major zone of resistance. I'm basically fighting price action because price action has previously told me that this is an area to where sellers like to step in, but yet I'm still taking a long position just because on the lower time frame, it looks good. This is where you can get trapped. But on the second trade I took on this day, I took a much better trade in the correct trade that I should have waited for. And this trade right here is basically buying after we found support down at that support level, and then we broke out above the New York anchored VWAP. So I'm trading from level to level. I have that support level as my support. I'm trading the breakout of the New York anchored VWAP, and then I'm taking my profit at the daily. Now, people may think, well, aren't you counter trend trading? You're fighting against VWAP. I'm using VWAP as my entry and as kind of levels to know when to get out. I'm using the higher time frame to tell me, hey, you're on the right side of the trade or you're going to get trapped. I feel like that information is very important as we see here. We're taking along at a very, very important support zone to where buyers have stepped in a lot previously. And if we just go back to the chart, this is the same exact zone. I believe this is actually the same exact date to where we actually did take that trade, which is literally right here, if I'm not mistaken, right? Yeah, the 30th. We're literally right here. This is our trade right here. And look how nice that looks, right? And so that's the move I was able to catch. Now, again, do I have to catch the entire move? No, because I'm not going for 50, 100 points. I'm only going for 10 to 15 points. So I'm trading from the New York anchored VWAP to the daily anchored VWAP. But I'm using the higher time frame and key levels to tell me when I should be looking for a trade. And then the VWAP on the lower time frame is telling me when exactly to get in. That's my entry criteria. And then so basically that was this day. And then again, once we kind of rally back up and we kind of like get near that support zone, we're clearly rejecting off of the start of week VWAP and the previous day's New York yellow VWAP. I get in short because I don't want to get in long when I know around this area, sellers like to step in. So again, I take the trade from level to level, from the previous day's New York and the start of week VWAP down to the daily anchored VWAP. And then from here, yeah, price does rally and we eventually break this level of resistance and move higher. But I can't bet that. I don't know that price is going to do that. I just need to trade with the information that I'm currently given. Now I'm going on to the next day I wanted to cover, which was on Tuesday, May the 6th. We can identify on the 1 hour chart that we have a major support zone right here that we've been able to identify because of this significant higher low. After breaking out above this area of resistance, we made a nice higher low here. So I'm going to go ahead and mark that off. And then we touch it 1, 2, and then 4 times. And then if you look at the trade that I actually took, just going like in pre-market, we can see that price is moving lower, making lower lows, lower highs. We're respecting the daily anchored VWAP, and we also rejected some levels above us. So we can expect that, okay, maybe price wants to come down to that support level. And if I'm brave enough, I can trade down to that support level, but I need to get out of my short before we hit that support level. And that's exactly what I do. I take a nice move of like 6.5 points overnight, easy peasy. And if we look at the second trade that I took a trade going into the open. Again, we have not engaged with that area of support yet. So we try to rally. Buyers fail to take price above the daily VWAP, which we've previously done all pre-market. Just looking at the 15-minute, look at that. I mean, that's crazy, right? And then so I basically take the breakout of the New York VWAP with the daily anchored VWAP as support. I mean, as resistance above me. And so that gives me the confidence to take the breakout play. And then guess when I get out? As soon as price taps that support level, I'm out of there. I'm taking my piece of the pie, and I was actually done for the day. But this is how adding these key levels and just using the 1 hour chart, you know, you can use any higher time frame, but mainly for me, the 1 hour chart has completely changed my trading because it kept me on the right side of trades. And it also told me when I can expect for these nice, easy moves to occur. And basically what I do is I literally just look at the chart. If I want to kind of label off these charts, right, I need to just find, okay, where is price? Let's go all the way back here, and we can just go from here. And then if we're just like kind of like staying here, we can just look at price action and be like, okay, there's definitely some buyers here. And it's up to your discretion. I'd rather cover like the deepest candle. I want to cover from its like body to its wick. And then I'll just go ahead and like mark that off as a support zone, right? So every single time price touches down here, I can kind of understand that buyer is going to step in here. Because why? If we look at the 1 hour chart, again, we just see a nice wick left here that tells me that buyers stepped in here, right? Sellers couldn't continue driving price lower, which is why we didn't close down here. We closed right here because buyers stepped in here. They had buying pressure to push the price up. And so that's what we saw. We saw a reaction of buyers stepping in once we actually kind of get that nice wick. And then what do? We come back down to test that same exact support level, and then we move even higher. We come right back down to test it one more time, and then buyers step right back in. And then later on this week, again, support zone, we bounce, we touch the zone, we see that buyers are stepping in like usual, and then it rallies higher. So you had 1, 2, 3 opportunities if you marked off the support zone to take advantage of some really nice long trades. But also vice versa. I mean, if we're just looking at the shorts as well, I mean, I don't want to go long into this zone right here. So again, like I would literally like mark this off because this looks like we have like a nice double top right here, right? So you can just like mark this off as like somewhat of a significant level, right, of resistance. And even though we did rip through this because of the Trump tariff news, which was on the 9th of April, it would not be smart for me to take a long position into this rejection zone, especially if I'm just like 5 points away, however. If I can get my like 10, 15 points before touching this zone, then yeah, you can definitely take that trade. But if I'm like right here and I'm trading into the zone, expecting for a price to break through the zone, that's a lot to ask for. I want for price to break through the zone to prove to me that buyers are strong enough to flip this from resistance into support, which they do. And then now we have a nice, beautiful area to where we can then look for some longs to step in because we can then look at this as a breakout and then retest and then bada bing, bada boom. Again, these zones are never going to be 100% perfect, but it's just to provide you with more information and more context to hopefully make your decision making a lot better. But that's why I think trading with key levels and identifying these key levels is super important as a trader, just because of how much context and information it gives you to be able to make these accurate, sound decisions within a split second.